Businesses are set up in a number of ways in a number of countries. This basically is just going to be a quick overview of how businesses are set up in the United States. I have a business degree. I don't presume to be passing on all of that knowledge to you. One thing I'd like to point out is that the graphic on the left illustrates the need to always quality control, quality review, and quality assess your AI contributions. Artificial intelligence is wonderful, but it still does require a human interloper. You can see on the left, if I'd have let it go, we'd be dealing with sole proprietorships, partnership, corporationships, conporaships. I'm not going to keep going. You get the point. Hey, look, really in the world, we've got sole proprietorships, which in the United States, you're allowed to just open up a business. You can name it after yourself. You can give it a doing business as name, but you have to then publish that in the newspaper and register it with your county. But if you just have a sole proprietorship under yourself, you don't have to do much more than file self-employment taxes, which can be rather large. Okay, one way to offset those taxes, and honestly, again, this is all about taxes. What do you do when you set up a business? You create a corporation. What does that word corp mean? Corpse? It means a body, okay? We are setting up an entity. People like to say, at least in the state I live in, that corporations are not people, but unfortunately, corporations are legal entities. And that corpus, that body that we create, is larger than ourselves. It lasts beyond ourselves. It can be taken away from us and we share it with others, and we can even allow it to own things and issue debts and whatnot. So functionally, philosophically, this is what we're doing when we set up a corporate structure. Even nonprofits, which are set up to do this, are set up not for profit, but for the benefit of others, but they are still, at the end of the day, a corporate entity. Okay? And what are we doing? We are taking and we are deferring a couple of things away from the individual. With the exception of sole proprietorships, the individual is getting rid of liability in terms of being held responsible for mistakes and destroying things or messing things up, right? But then also tax liability, and it's a different way to get taxed, okay? So you can have a business which pays you, and then the business pays the taxes on you, and that's different than the way that you pay taxes as an individual. And then depending on which tax organizational structure you chose, sometimes you get taxed sort of twice, or sometimes it only passes through in order for you to be taxed once. And I'm not going to sort through all of that right now. Here's what you need to know. Okay? If a person has a sole proprietorship, they're allowed to do that. They're allowed to have a DBA, doing business as, and they're allowed to set up a business. Okay? That's essentially a very high level of taxation. A partnership splits that between more than one person, but they still retain all kinds of legal liability. Under both of those structures, personal assets and partner assets can sometimes become subject to legal judgments and things like that. So it can be problematic. That's why you set up an S corporation, a C corporation, or a limited liability company. These are all different types of or maybe it's a corporation. Yeah, I might have gotten that wrong. That's fine. S&C corporations, LLCs, look, this is a way to defer the taxes away from yourself and a way to create an entity that basically insulates you completely and your personal assets completely from the liability that then the corporate body takes on. So it can own things, it can get sued, it can have intellectual property, it can have a board. Basically, S&C corporations are larger and have more tax liability, but they have more complex structure, and that allows for scaling. Limited liability companies can have various sizes, but basically, it's a great vehicle for small businesses. You can set them up for a single purpose, but they can also be abused quite a bit in terms of different types of financial crime and illicit activity. That's what we're going to go into next. But first, let's talk about nonprofits, okay? The point of all of the other types of organization is to make a profit. And when we talk about profit, it is where the business needs to pay some money to operate, right? If they have an office, they have to pay the rent or the lease or the mortgage or the taxes on the property, and those things cost money. So it costs money to be in business, right? And then after you pay those costs, you subtract the costs from how much money was made from selling the product or the service, right? And that's called a profit. A nonprofit has to take whatever the difference is there and completely reinvest it into its structure. And it can't just distribute profits to the ownership and go, yay, we made all this money. It has to use all of the money to be reinvested in the corporate body. Now, companies do the same thing, right? They're constantly saying, hey, we're not going to distribute this to our shareholders. We're not going to pay this as bonuses. We're not going to pay this as salary raises or benefits. We're going to reinvest it in business operations so that we can become more profitable. Sometimes they share that among the members and the workers. Sometimes they don't. Okay, that is part of the way that it's set up. You got to know the rules of the game. I didn't write them, but we're all playing it. Except for these guys. Coming next, financial crime.